So good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky to be joined by Sid from Arbol Markets. Sid, good morning for me. It's good morning for you, actually, I believe. How are you?
Yeah, I'm good. Thanks for having me here. It's a pleasure.
No, not at all. Not at all. Well, look, before we get into the kind of details of Parametrics, which is a big foundation of obviously what the business does, if you'd be kind enough to introduce Arbol Markets. So for those of the guys out there that don't understand or know the business, it'd be great to get your take on what you guys do.
Yeah, absolutely. So Arbol is a platform for parametric coverage. What that means is clients can reduce risk of all types of different external calamities, from climate risk to price risk, using data to make the payouts rather than an adjuster or someone from an insurance company coming to your farm or business to assess the damage. Mm-hmm. So, using different types of data sets like weather data, climate data, price data, we're able to offer, clients protection that has no claims, no paperwork, no hassles, that typically characterizes the traditional insurance experience. The platform is run entirely via smart contracts and an AI pricing engine. And so the entire process, is automated from start to finish and really enables a very clean digital experience for the customer, while also, helping cover many types of risks that the traditional insurance industry has been unable to or unwilling to provide enough capital for.
Mm-hmm, mm-hmm. Thank you for that. And as I sort of jokingly said on air, I'm always impressed about how succinct those things get down. But that's what happens when you go through the raises. And
actually, after you do it, 6,000 times.
exactly. So thank you. I wanted to ask you, like, parametrics is something we've talked about a couple of times on the podcast and from different angles. But I'm interested in the platform perspective. So just for sort of clarity, how does that work? Who's bringing the business? Is a broker bringing a proposition, or is a client coming directly and saying, I can't get insurance? Who's coming onto the platform from that perspective?
Yeah, it's very industry dependent. So one of the great things about parametric insurance, and we also do these things as derivatives, so that's a legal distinction, not a product distinction. Mm-hmm. But one of the great things about parametric insurance is how scalable it is. So many similar products with some small tweaks can be applicable for anything from the farming industry to the hospitality industry. Mm-hmm. So as an example, too much rain in a farming part can be bad for the crop, but too much rain can also ruin your vacation on the coastline. Yep. So there's a lot of scale to this whole business. And so when we work on these different products, the products might be similar, but it's where the sales channel is very different. So in agriculture in the US, where we got our start, a lot of the business is via crop insurance agents who are selling these as supplementary or add-on products, mm-hmm. or they are filling a gap in the federal subsidized crop insurance system, mm-hmm. which is a big thing here in the US. And in many parts of the world, it's really, you cannot bypass the agent networks. So we basically make the platform as convenient for the agents as possible. Mm-hmm. In a market like energy, the clients are larger, more sophisticated, and it's often direct client business. Yeah. It could be a wind farm, which is looking to manage its risk of wind speed. Or it could be a traditional utility looking to manage its temperature risk, because if temperatures spike and people run more air conditioning, they're going to have losses because they need to buy power in the spot market. Mm-hmm. In other things like hospitality, we're working with different channel partners, like where you book vacation rental homes and you can put in some rainfall cover so that all that money you spent on a vacation home doesn't go to waste when you have rain every single day of your trip. So it's very industry dependent. And so it's a mix of agents and brokers. And that's where the flexibility comes in, is we try to make sure that the process is as simple as possible for a really wide set of clients.
Mm-hmm. So is it sort of safe to say that with the platform, realistically, if a suitable metric can be found and the right conditions can be found, you know, you're completely sort of line of business agnostic from the insurance point of view?
Absolutely. If there is an objective data set that is trustworthy and has a long enough history, we will look to write a contract on it. And as data sets get better and more granular, we're finding that there are many areas where we're just building new markets. That's the great thing about Arbol, is that a lot of our clients have never transacted in any type of cover that they're buying from us. And it's just because we are at the forefront of a lot of these data sets and are able to price these very varied risks. That we are able to deploy products that people have not even experienced before. And the whole idea here is to broaden the adoption of parametric insurance. So it's not just trying to chase the same traditional business, but really sort of think outside the box and build new markets.
I mean, that was one of my first questions I was going to ask you, and I think we've touched on it. There is that because there's an element of this where you're filling a gap, right? So we were saying about subsidies, there's a gap in coverage, so we're buying that. But is it a kind of a sort of new opportunity? And I appreciate that I'm going to roll two into one here. With Parametrics, the kind of concept's been around for quite a long time, but it appears to be having its moment. So it was a two-part question, really. Are we filling a gap, or is it a new opportunity? And then why is it now? Why is Parametrics kind of really blowing up now, do you think?
Yeah, so we are doing both, filling gaps where there are, or building new markets. And even when we say we're filling a gap, it's because the traditional insurance industry is unwilling to or unable to write risks or to cover those situations. So even in that case, you are filling a gap that nobody else was. It's not like you're pushing anyone out. So, in certain types of crop insurance or many types of climate risk insurance, like hurricanes, even if you can get coverage, the deductible is huge. Yeah. And so when you're trying to, insure yourself, you're really still facing a very large bill if something happens. The other big problem is, and this is often, not appreciated as much. When we were starting Arbol, the first thing everyone would talk about is basis risk. I mean, I would hear that phrase all the time about parametric. What people forget is how much basis risk is in traditional insurance. You have a process where something happens to you, and then you might get paid 6 months, a year and a half later. We were talking about home renovations before we started the podcast. We had a flood when we did ours. Of course, on the tail end of it. It took a year and a half to get the claim settled. And we had no idea how much we would get paid on that. On a much larger scale, with COVID, you have 25,000 plus lawsuits happening all over the country. And you've had a major, many examples, but a major department store here went bankrupt because the insurers refused to pay. And so nobody talks enough about that basis risk. To me, that's a massive basis risk. You don't know when you'll get paid, and you don't know how much you'll get paid. That's a problem. At least with parametrics, you can point to a data set and say, hey, this is the data. Sure, it may not match exactly what's happening to me, but I know I'm going to get paid this much in 2 weeks or 3 weeks. And that kind of comfort is extremely important, especially post-COVID, where you had a huge amount of disruption in the insurance system. And so the other question, which is why is it now the moment? A big part of this is that the data sets are finally granular enough, right? Many weather data sets, say 10, 15, 20 years ago, could have been 100 mile by 100 mile grid. A lot can happen within, 100 mile by 100 mile rainfall grid. Now you can get down to a kilometer. We run programs that use sensors all over farming equipment to get it even more specific to the farmer's experience, or use temperature measurements that are right as close to the site as you can. These kinds of things allow the basis risk to shrink considerably and give the customer comfort that this data set will match my experience. So there is a lot of advancement happening here where it makes parametrics what we think is they're at the cusp of what e-commerce was like in the 90s. Traditional insurance is like brick and mortar, and parametric insurance will really take that digital experience from start to finish. You can have a digital insurance product at the forefront where you buy it. That's nice. But to truly change the way, you have $1 trillion of crops that are estimated to be uninsured globally. You have hundreds of billions in losses each year from climate risk, which is uninsured. These are massive gaps. This is not just a small problem we're trying to address. And you see the climate sort of issues getting worse and worse. The floods in Germany right now, or the heat spikes out west here. There's a lot of clients with inadequate or no coverage for such events. And parametric insurance is going to be the easiest way to enable broad scale adoption of insurance, which allows you to manage your risk and plan for the future and adapt to climate change, not just wait for disaster aid after the fact. So to make parametric insurance worse is to make it work is a crucial thing that we need to solve.
It's so interesting for me because I think I've been in insurance for 15 years. I worked on the carrier side before I came into headhunting, and the continuous conversation was just on a simple example was business interruption. Every time we were hit with a big event, a hurricane, it would always be, the language was always that people hadn't bought business interruption, or hadn't bought enough of it, or they didn't understand the coverage. And I felt the language, and I'm not saying this is the intention, but I always felt the language at times like that were putting it on to the consumer, and they were making it the consumer's fault. Whereas I felt that there was just a lack of simplicity, because the data isn't there to say, how much cover is appropriate for you to get back on your feet if you don't know how long the timescale of your claim is going to take for payment, or whether you're going to get paid or how much you're going to get paid. Whereas if you can kind of define those metrics, and it may not pay out as much, or it may not pay out, but you know exactly what it is. And, most businesses it's about planning ahead. So there's something in the simplicity of it that seems that it's been missing from the language or the kind of ecosystem of insurance previously.
Yeah, absolutely. I mean, we see insurance contracts that are hundreds of pages long, and it will have exceptions related to everything from volcanoes to pandemics, which of course became important here. Our contracts are, a couple pages long and you're done. It's very clear what will trigger your payout and what will not. And, when you were talking about business interruption, I mean, there's claims going on from, I think, Hurricane Irma, which was like 3-4 years ago still. Yeah. A lot, we are still sorting out stuff from back then. If you're a large corporate client, you just go along with these things. When you're a small business, this can become a life and death for your business. I mean, you can't have a system where you're waiting this long. And once you leave the US and Europe area, I mean, the insurance penetration collapses, and you have lots of uninsured, because there's no way to run that in via the traditional channels.
As a result of it being sort of different, and we know what parametrics are, we're in the space, but I appreciate you're not necessarily in the selling of it, because you're creating products for people, marketplaces for maybe brokers to distribute, or obviously the end consumer, the sophisticated consumer, is coming to you directly, so obviously they know what it is. Do you feel that there's a bit of a education piece when kind of trying to attract business, because it is different, and it's kind of I don't know, have you had any feedback around that? Is it, because it seems like a no-brainer solution, which always to me is the best solutions. But as a business owner, I'm just thinking, I had an office where the internet went down intermittently for 6 months. And I don't know how I would have got coverage, but let's say basically my office was out of action. I basically lost 2 staff as a result of it, because they just got so frustrated they left, and that wasn't necessarily claimable, but effectively I was out of business, and all I needed was to be able to get out of my contract and money to go to a new office, but I just didn't have it at the time. So I sort of know firsthand how crippling it is. But yeah, the education piece, I don't know if I would have understood parametrics if you tried to sell it to me. So is that something that ever comes up as an issue?
Absolutely. It's a process for sure. And the great thing is that the consumer has become much more aware of these issues and alternative ways to solve it. And often what helps us out is, one, they've had not a great experience with the traditional insurance industry. And especially COVID really sort of brought that to the fore. I think that in many cases, the customer is also a lot more open-minded because there may not be any coverage available. So it's something that's there. That said, it is, we try to go for first the lowest hanging fruit, right? So where is it easier? So one of the reasons we started in the US crop system, which apart from me being a commodities trader in my past life, was that the US government actually runs a multi-billion-dollar parametric insurance program for just pasture and hay. So this is one crop where the farmer gets paid if the rainfall is too low. It spread like wildfire. And that's a great example of where, this program, started in 2007, and by 2015, it goes live, and then it triples its size in just a year or two. So what it showed was how much potential there is once there is an understanding. But the success of that program helps with the education of all other programs, because a lot of the agents are familiar with it. It's sold in like 25 states here. The other way we try to really sort of narrow that gap is to work with, better and better data sets, and to show that, you can get paid on output, not just on weather, right, on the farm side. With other situations like in energy, the needs are, as you said, the clients are more sophisticated, but also the needs are growing extremely fast. So you obviously have a big problem of heat spikes and temperature drops that can be catastrophic to your utility business. I think there was a stat that when the temperatures dropped in Texas this Feb, 9 utilities either had to declare bankruptcy or almost did, right? So this is a serious problem that they have to address. And the growth of renewables is especially interesting because that just introduces a really new set of weather risks, whether it is cloud cover or wind speed. So we're seeing a lot of traction there. And I think in other industries, we try to go for where the education required is the lowest at first, and then grow from there. So for me, I mean, travel insurance is a great example. I always thought that, for me, the biggest fear always is that I'm just going to be sitting on a rainy beach. It's just, you can cover for all the really outside cases, but that's a big one. And that's something we're working on in a number of different areas. And I think that things like that, where it's intuitively clear what, is the risk, that helps. Some of the stuff you mentioned around business interruption is definitely, needed. I think there it's a matter of really, often it's a matter of teaching the brokers and the agents, because a lot of people actually never deal with their insurance company directly. And that's where where it takes time. The agent is generally dealing with the customer, the retail agent. They are the ones who need to be kind of educated. Once you educate them in a simple enough way and they get it, and they know that obviously they're incentivized because they'll get commission, then they have a sense for, okay, these are the customers who might actually use this. But what I often find is that's where the awareness is really lacking, is, you're almost never dealing with the customer directly as an insurance outfit, right? You're dealing with the retail agent or someone like that. They need to be made aware. And I've seen many examples of where there'll be a parametric option for something that they can't find coverage for in the traditional market, but they are not even aware that exists.
Yeah.
we have a lot of webinars. We have a lot of these kinds of things on almost on a continuous basis. Put out new products, have webinars, get the agents aware that this is out there. Then they actually are quite good at understanding, okay, these are the 6 clients I have that could really use this product.
Mm-hmm.
But it needs to be, proactively presented to them.
Yeah, absolutely. No, yeah, I can see that. It's a sort of one-to-many approach with the kind of education piece. And you mentioned the pandemic had kind of opened up people's minds a little bit to kind of what their coverage is. And I think there's been a focus on their coverage. But what has the pandemic done for your business? Has there been any direct kind of applications? And I was really interested to see whether it had led to kind of the creation of new products specifically over this time.
Well, we've been creating new products at a rapid pace, but that's just because, we've been growing very fast. We're on track to grow, a couple orders of magnitude this year, basically. Mm-hmm. So we're seeing massive demand growth year on year. I think some of that is due to the pandemic, but a lot of it is just due to products being available that are just not easily available in the market and at a price that is acceptable. That's a big part of it. And that comes because we also bring in the other piece of the puzzle, which is the capital, which is not traditional reinsurance capital. Mm-hmm. The other problem you mentioned before, but I mean, the parametric problem was a lot of these products were extremely expensive. The cost of operations was high, the capital cost was high, and by the end of it, the consumer's paying a price that, it's not going to be a repeat customer, and it's going to be hobbled from the start. With regards to the pandemic, I think it's more that the awareness and the sort of comfort with digital solutions has increased dramatically. And while we don't have any products directly related to the pandemic per se, it's that the customers have become very aware that a digital solution where they get paid quickly and transparently has a lot of value. So, we've come out with a ton of new products in the ag and energy space over the last year. That's less due to the pandemic. It's more just due to demand.
Mm-hmm. On new products, I think I wrote this question down, but I don't know if it's a very well written question, because I said, I was going to ask something about the simplicity. But I think that implies that it's simple to do the mechanics of what you do, and certainly I don't think that is. But is there something about the structure of what you're offering in the parametric space that enables you to be faster in terms of kind of developing new products?
Yeah, I mean, well, we have obviously, as you might imagine, considerably less bureaucracy when it comes to building software and products. One thing that helps a lot is, for us, product is code, right? It's starts and ends with smart contracts that auto manage the process. Mm-hmm. So once we conceive of a product and we think that there's enough demand, we can encode it and then it sort of self-manages itself. So, our products are really varied. It could be, something that pays out based on crop yield data, something that pays on obviously rainfall or temperature data. We've been having a lot of great traction on products based on wind speed data. And we'll soon be coming out with products based on everything from cloud cover to snowfall. Mm-hmm. And so the end goal is to make sure that, and a lot of the work initially is to make sure that the product will match the user's experience losses, right? Without actually having to verify those losses, but something that where the triggers and thresholds really match reality. And that's where, we have a very experienced team in this part of the space. I mean, we focus a lot on that aspect. But once that is conceived of, then the marginal cost of operating a product or like deploying it is extremely low. And that's because we started with this whole idea of smart contracts and just automation on all levels. Mm-hmm. And then the pricing, we don't have underwriters, underwriting staff. Our only underwriter is this AI underwriter that just kind of prices all deals simultaneously. Mm-hmm. So we're not pricing risks in an isolated way, which it can cause problems when you manage a book. Me and some of the team, we have experience managing systematic trading books from the Wall Street days, and we try to bring that risk management to the insurance side, which is not as accustomed to it. And so the pricing also plugs in directly, seamlessly, once a product is built. And yeah, the goal is to do, as soon as we see that there might be demand for a type of product, we can build it, deploy it, and all of that can happen within maybe 2 to 3 weeks.
There's so much I want to pick up off there, but I'm gonna go out of order for a second. Certainly for the smart contract piece, is that do you think there's because smart contracts are getting talked about in insurance. I don't know if anyone's truly deploying it. Do you think there's a misunderstanding about what it represents, or do you think some people are sort of jumping on the back of some good tech because it makes good press? I don't know. I just wanted to get your, especially because you've come from outside of the insurance industry. Do you think there is maybe a misunderstanding or a purposeful misunderstanding of it all?
Yeah, I agree. I think, well, there's a contingent which is where there's definitely a lot of press type stuff that goes around things like blockchain and smart contracts. When we started with blockchain being a core part of our tech, right? And that was in 2018 in the shadow of the 2017 crash. So nobody wanted to talk about it. You can see the press releases kind of follow, how well Bitcoin is doing because people get excited about it. I think that, when we think about smart contracts, it's not just about, sort of an if-then clause. Okay, if this happens, pay this guy. There's a lot of other layers around payments and sort of integrating from start to finish the entire process. So you're taking in your premiums, monitoring the data, auditing the whole chain, and then deciding that, oh yeah, this is going to be evaluated to pay, the customer needs to pay the $1,000. This gets transferred directly into their bank account. So it's that whole process. And what we have found through a lot of, kind of winding roads is that there's a lot of institutional blocks to fully implementing the solution. We do have to centralize certain things. It can't be full blockchain, but we're working on it. We're not there yet either. But I think we're considerably farther along than anything else we've seen in the market. And the problem that tends to happen is the traditional industry is, they, I think, don't understand the full power of this. And those that don't understand insurance. And so they get stuck, the true blockchain guys get stuck on how do you scale this thing? How do you make it regulatorily compatible? How do you get the brokers to sign on? Things like that. So we sort of sit in the middle, and that's why we are a hybrid, because we also need to build a business. And for us, blockchain is a tool like many other tools. We don't really kind of use it in pitches and stuff as much as you would think. It's just more like this was something that we saw would be very useful for the future, especially as the programs get more and more complex, right? A smart contract that just reads one rainfall data set it's fine, but it's not going to change the world, right? What starts to really bring it to the forefront is one, either you're operating in countries where the trust levels are very low, and there's benefits to having things on chain that can be audited very carefully. Or when you start to run really complex programs with, say, which we already are on that path, is imagine a parametric program that needs to take in data from thousands of sensors, sending out data every second, and then deciding, okay, this is the payout using some algorithms. It's in those situations where you're not the only party here, right? As in the insurance company, you will have a reinsurer, you'll have the client, you'll have the agent. You have different parties who don't necessarily trust each other, or at least aren't in the same corporate entity. All need to verify why a payout was determined, right? Or how much to pay out. That's an ideal case for blockchain and smart contracts, because what you're looking at is a distributed ledger, a ledger that multiple parties who are not connected to each other can agree on. And so there is a lot of benefits of scale that will come as we go to, you could call it insurance 2.0 products, which are not just a rainfall data series or a temperature data series, but something that requires monitoring the entire crop season, for example, to make sure moral hazard doesn't happen, things like that.
Yeah, interesting. I mean, the complexity of the kind of component parts and the value chain of insurance, it would make sense to lend itself very well, particularly that kind of broker carrier.
And we see this all the time. Like we operate in the reinsurance space, and one of the things that the first reinsurance deal we did, immediately it was obvious to us that a distributed ledger would solve so many issues in how many frictions there are, right? Between, there's a reinsurance company, there's a reinsurance MGA, there's a insurance company, there's an insurance MGA, there's a retail agent, and then there's the customer. All these parties, and documents are being emailed nonstop. And the thing is, we're not just doing this to make things efficient for the sake of efficiency. Each layer, each person involved adds tremendous amounts of cost. Each of these layers is taking 10% fee. By the time you get to the customer, it's crazy what they pay versus what the actual capital is receiving. And these kinds of things are what keep insurance adoption at a low level. In the urban areas of the West, where standard car insurance, home insurance, sure, that's doing fine in terms of adoption. But we start to either leave the US, or you start to look at like the climate risks I was mentioning and things like that, you're not going to get broad scale adoption unless you can lower the costs of doing business.
Yeah, and any tool towards that, because there's a lot of conversations about insurance as a form of social good, or and how much we do towards that. A lot of it's kind of how do you distribute it to more people? How do you make it more accessible to more people? And the most obvious is to get rid of the cost. And that doesn't mean getting rid of insurance. It means getting rid of like the layers that kind of just add that cost, and simplicity is such a driver towards that.
Because then it doesn't need to be a charity, right? It needs to be a self-sustaining business that allows a larger amount of people to plan. I mean, one of the things that there's a book I read many years ago called Poor Economics, very, very good book, but it talk about how insured our lives are in the developed part of the world, where your glass of water is clean, you're covered for health issues, you're covered for fire in your house, and this and that. These are things that we take for granted and are completely foreign to literally billion plus people. Like one rainstorm or one drought can set you back years of income, or one health problem in your family. And this happens all the time. I'm from such a country, right? It's without insurance, it's so hard to escape that cycle of poverty too, right? It's an extremely important thing that needs to be solved. And it's not going to be solved if you have 30, 40, 50% in fees on top of already this kind of oligopolistic industry setup.
Sure. I mean, just touching on that, and conscious of time, so I'll start to wind things up. But I've got a couple of key questions that I think is about your viewpoint. You don't come from the traditional insurance market; you come from traditional, more finance markets. I always ask this to people that sort of enter the insurance market later. Is there anything that specifically jumped out at you and surprised you when you started looking at the insurance market more closely?
Yeah, I would say that, and I don't mean this as any sort of dig on the people who work in insurance, but I was shocked at how behind it was in the way we use risk and in the way that things like contracts are settled, both operationally and from a risk management standpoint. And I think part of the issue is that you have you have an industry that I think is a lot more protected by regulation than finance is anymore, right? There's obviously entities in finance that are also overly protected by regulation, but there are also extremely competitive firms. Like I was, partly in the hedge fund space, partly in the commodity trade house space, and I was also at a very big bank. So you could see the differences, but large parts of finance are highly competitive. And if you don't innovate, if you don't come up with new strategies, find new markets, you're going to disappear. Mm-hmm. And I think that in the insurance space, there's a lot more regulatory protection across the whole space. And so what that leads to is, what I found was there were many aspects of it which reminded me of how markets I'd heard operated in the 90s. I hadn't actually seen that, still in middle school, but my co-founder has been in markets since the late 80s. And for him, it was just like dealing in the 90s. You're sending around faxes, and like the amount of steps you need to complete a transaction is just mind-boggling. Mm. And when I saw how like the risk was managed also, it's very like old style kind of risk management rather than viewing it as a whole sort of big picture. And so that's some of the stuff that we obviously started with addressing, is like, let's get operational efficiency and let's get risk management to be much more involved, and pricing and things like that. Mm. But it was, it was definitely very different.
Yeah, I mean, it was. I started in the UK, obviously, and going up to London for the first time, and then looking at people carrying suitcases, and going, "Oh, what's in the suitcase?" And they were like, "Oh no, that's paper." And I was like, "Wow!" Like it just come from university. I was thinking, right. I don't even have anything on paper anymore. But yeah, I mean, luckily it's moving forward. But it is interesting how much, the commonality is exactly that. But it's interesting to hear your kind of view on risk. And I wanted to ask you, because I know that you raising capacity wasn't from kind of traditional insurance markets or reinsurance markets. And what's the appetite for this type of opportunity? It seems to be quite large, because do they view it more, this is more akin to a traditional financial product than like insurance as a standalone product?
Absolutely. And this was part of the, the Arbol vision was twofold. One, that the customer will love Parametrics. Mm-hmm. And the second was that the capital markets will love Parametrics.
Yeah.
The same problem that customer faces with traditional indemnity insurance is the same problem capital will face, right? If you have 2-3 years to settle claims and you have no idea what the payout's going to be, that's not very comforting to an investor who is used to investing in traditional markets where, okay, there's the stock price and this is the price of corn futures. Every single second of the day, you know where your book stands. Mm-hmm. And so to get a broader participation from the non-insurance sector, the parametric space is essential. And when you look at what a parametric insurance contract is, it's almost identical to similar derivatives. It's like a rainfall derivative or a temperature derivative. In fact, a lot of our business is done in derivative form, mm-hmm. where possible, because the costs are much lower of operating. So the capacity we lined up was non-traditional, and we think that there's this year has almost been a demonstration of what the returns can be, and they've been great. But also the biggest thing that when I was at hedge funds and these trading outfits, you're always looking for uncorrelated risk. Mm-hmm. And risk based on rainfall in a county of Iowa or temperature in Atlanta or things like that are some of the least correlated risks that are out there. It doesn't matter what the Federal Reserve is talking about. Temperature will do what temperature does. So mm-hmm. you basically create a new asset class that now non-traditional sources love. That flow of capital is essential to, again, pushing down prices and broadening the adoption. So, as I mentioned, we've had tremendous growth over the last year, and part of that has been lining up the capacity, and now we've completed the circle, mm-hmm. right? We can get data, build a product, deploy it, and cover the risk all in-house, essentially.
Yeah.
what that enables is much more rapid deployment products, but also the deployment of much more complex products that really get down to what the customer is facing in terms of risk. We don't have a very long process to like say, okay, this is what the product looks like. Now, going through the bureaucratic hurdles of when you deal with a major insurance company.
Yeah, it's huge. And I think some of those problems have been really coming up. I mean, I know it's a very different thing, but looking at people trying to raise capacities for MGAs, it's been incredibly difficult, but mainly just because of the process, the timescales, and then, you've got a window of opportunity to get out there, and it hasn't happened. So I've got two very quick last questions. Well, they might be quick, we don't know. But am I right in you founded this business? I think there's a number of partners, but one of them's your brother, I believe.
So there's 4 co-founders, and one of them happens to be my brother.
I was wondering if there's any unique challenges with working with a brother, or is it all happy families at Team Arbol?
We always did all sorts of deals together and things like that. It helps that he's 7 years younger, so it's a big gap. So we never had like what you would call sibling rivalry or anything like that. And we just hang out anyway, so it works pretty well. And we were always getting involved in different deals together for like investing and things like that, and so it works out well.
But you said you're the older brother, so if all else fails, you can just pull out the older brother card.
Exactly. So that always works. And like my other co-founder, one of them I known for 10 years, so it's a tight group and it helps a lot. I mean, we all were, obviously working, without much, you can call it compensation or things like that for a while. And, I think that helps a lot though, is this inherent trust we have in each other's abilities. And we all bring, probably most importantly, we all bring very different things to the table, and the age range in our co-founding group is, on the order of 30, 40 years. So you get old school, wisdom and, coding skills. And I sit somewhere in the middle. I coded a bunch, but I also worked a lot in the commodity business sector and things like that. And so we all bring different, very unique skills to the table that helps to make sure that we don't have any gaps in what we need to get done. Because something like Arbol just requires a huge number of skill sets, because you're touching on regulatory, legal stuff, obviously the insurance and derivatives industries, but also it's quite an effort on the coding side and the pricing engine. So everyone needs to bring very different skill sets at the table.
Yeah, and that seems to be the ongoing theme. Every time I ask that, it's like, as long as everyone has a defined role and they bring their different strengths, and then it gets there. It seems to be only a problem when they've got similar, because I've had some people who have had the good idea, but they might both be essentially salespeople, for example, and then you get conflict.
Exactly.
But my last question, and I'll let you go, is obviously you oversubscribed on your fundraising, I know, earlier in the year, and obviously you grew incredibly quickly. How do you maintain culture? And I'm now starting to evolve this question, because I'm asking whether you do maintain culture or you just you let it grow.
I tend to have a very sort of organic, evolutionary view of these things. I think that what I try to instill is, and all of us do, is we work very hard. We make sure that results, are delivered. And, I think a culture is that of teamwork and making sure that, again, we bring all the necessary, because almost nothing in Arbol is doable by a single person, just because we do need the input of every aspect, what I mentioned, from regulations to coding. And so the goal is to foster, collaboration amongst the different teams. And, we don't have we don't have like the standard ego trips. I think everyone is very collaborative, and we've always made sure of that. But beyond that, I let these things evolve. You know, obviously, if you see a problem, then you have to intervene. But I haven't had that, luckily. And you know, the true culture of Arbol is that, yeah, we work hard, and you know, we really make sure to do everything with as much excellence as possible. You know, if you do something, do it really, really well. And yeah, beyond that, I don't know if you know, there's not. I've never agreed with the whole, you know, forcing corporate culture down people's throats. We don't even have defined work hours or vacations. You know, everyone is free to take off whenever they want, come into the office, don't come in, it's fine. It's been always a very almost, you know, a decentralized approach, and that, you know, goes back to our, I guess, our blockchain view of the world. But we have a very decentralized system, and anyone, if they have a good idea, they're open to follow it along. And we actually have that all the time. And people will have different ideas about, because we also operate in a space where there's so much room for creative thinking. Like, oh yeah, maybe snowplow companies could use snow insurance, or you know, maybe you know, so and so type of business would love rainfall insurance. And we're all welcome to sort of grow that idea together. So, and you know, many things don't work out. That's also fine. It's a tough business, but we try to make sure that everyone is given a level playing field. It's very flat structure. We're all on Slack at different random hours of the night or day. Yeah, people also maintain very different hours. Like some team members are up at like 1 a.m. and others are, you know, 9 to 5 type hours. But it all works very well, because that's the culture is, you know, first and foremost, you know, do something. If you do something, do it to the max possible excellence.
Yeah, lovely. And that is a perfect leadership and insurance cast thing to end on. So we're gonna call it there. Sid, thank you so much for your time. I really, really appreciate you taking the time out. I think it's fascinating what you're doing. I love the space, and I want to keep involved and keep listening to what you're doing. Thank you.
For sure. Thank you for having me, and it's been a pleasure.